following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You are responsible for your own happiness. Happiness never comes from outside of you. If you put your happiness in someone else's hands, they can always take it away. Happiness can only come in from inside of you, and is a result of your love. Market-wise, let's take a look at it out here. We have the Dow Industrials down 19, Dow Industrials down 42, NASDAQ down 19, S&P's off 3.5, gold contract up $7.80, trading at $1,273 an ounce. Silver down 10 cents, $17.32 an ounce. Platinum up $10 at $9.50 an ounce. Light sweet crude down $1.52, $48.14 a barrel. Notes, 10-year note up 2 ticks, 126.16. 30-year bond up 13 ticks, 155 flat. King dollar down 282 ticks, trading at 96.930. The euro is at 112 to the U.S. dollar. The yen is at 110.69 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so you get a sideways market out here in the S&P. You have an expansion of volume going lower. Bottom line, you've done 47 million shares. I suspect we'll see where we're going to close out on the SPY. We're at 241.08 right now, and bottom line, if you close out there, it's not going to mean a thing because you're still at highs. Dow Industrials, we take a look at the Dow Industrials. Dow Industrials are back under its April highs. That number was 21,070. You're at 20,984, and that's saying that, okay, this wants to go down to the lower end of where the Dow's been trading, and the first stop would be 20,553. So that's down quite a bit from where we are right now. The composite, NASDAQ composite down $19. You're at 61.84. This also is really still at highs, folks. Bottom line, with 61.84, the composite would have to close under 61.70. Now, we got under 61.70 today. We got to 61.64. We'll see how this shakes out coming into the close. NDX 100, same kind of setup in the NDX 100. You're at the highs. You're down $17, but the NDX has a long way to go in order to break this uptrend. We'd have to get into the 57.24 area. Right now, you're at the 57.70 area. Gold contract. What do we have with gold? Gold contract wants higher price. Gold contract out here today, we are at, okay, trading 1273. You've done 187,000 contracts. It's good contract volume. It's holding price. The low of the high is 1286. The high we're talking about is on the 17th of July, April, and I expect that's exactly where we're going for. We go take a look at the silver contract out here. Silver right now is trading at $17.32. That's down 10 cents, and that's a sideways move. That's what I like to see. Silver, folks, I want to see this thing move sideways a bit and build some cause. Because if we build the cause, then you're going to have the probability much higher that you can reach the high of 1872. Notes and bonds, bottom line, they continue to want higher price, and rates are going down, folks. The 10-year note, what you have with the 10-year note out here, let's see, TY, I got to change these into the active contracts, because right now we just swapped over to the September contract. And if we take a look at this, you've done 1.3 million contracts. You're at a price point of 126.08. The highs that we're talking about thus far is 126.13. You've hit 126.10, and we get volume. This thing looks like it's going to lay out right at the highs. And if that's where we lay out and we're closing today, this thing more than likely is going to jump the creek. And jumping the creek means that you'll gap higher tomorrow. And I suspect it's going to be very easy to do an ABC structure up in the 10-year. If we take a look at the 30-year, 30 is a little bit different. 30-year is going to need, not really, I guess not. No, the 30-year, we're right next to the high also. We're at 153.22. Yeah, we're right next to it. 154.04. That 30-year can take it out tomorrow too, real easy. And that's going to lay up a 158. 155 first in the 30-year. The yield right now out here today is trading at 2.199, so we got under 2. King dollar. What do you have with King dollar? King dollar, folks, trouble in paradise. You've done 26,000 contracts out here today. Not huge. Bottom line, though, still can't hold price. Your swing low is 96,700. We went to 96,795. And it looks like King Dollar is going to lay out right here as we come into the close. And if that's what we get, bottom line, this thing will jump the creek or go after the B point. And this would be, let's see, so 99,760. This is a big one. That's a 3-point A to B, which would bring you down to 94,700. And when you do put this on a continuous contract, that 95 area is screaming inside the dollar index. And the 95, that's right where we started off from on the election night, 95,905. That's where we're going. That's the number. And we'll see how we get down there volume. Because if we barrel down there with volume, then it does open up the whole lower end of the consolidation that we've been in since March of 2015. That'll get you back to the 91 area. The XLE, huge problem for the Dow Industrials out here. XLE, that's blowing the lowest swing point, 65.83. Right now you're at 65.40. The XLF, also huge drag on the Dow. The XLF is down 29 cents with 94 million shares traded. That has a huge expansion of volume as you're going lower. And the first culprit out here is Goldman. Goldman's down $8, blowing away a swing point with volume. It's already confirmed ABC structure down to 202. Right now you're at 210.33. It's Tom O'Brien. This is TFNN. You stay right there, folks. Be coming right back. Dow Industrials down 40. NASDAQ off 16. S&Ps are off 3.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. I want to know what's going on in your world. In the world of the Dow Industrials, let's take a look at it. Let's take a look at the leaders versus the laggards. The big laggard inside the Dow today is the financials, folks. You have Goldman Sachs putting 54 negative points, JP Morgan putting 15, United Health putting 10, Apple putting 6. The positive inside the Dow Industrials today is that you get Johnson & Johnson putting 10 positive points in, 3M 9, McDonald's 8, Boeing 7. Inside the NDX 100, we look at the strength versus the weakness. Strength inside the NDX 100 today is that you have Analog Devices up 2.1%, Vertex Pharmaceuticals up 2%, Illumina is up 2%, and PayPal is up 1.9%. Taken away from it is Riley Automotive down 2.4%. You get Baidu off 2%, JD.com down 1.75%, and Liberty off 1.3%. We take a look at some of the higher volume stocks out here in this market. Bank of America is the leader. That's down 64 cents. You get Chesapeake Energy down 13. JP Morgan is down $2. And if we do go over to a couple of these financials, it's pretty intense what you have happening. So JP Morgan came out this morning, folks, and basically started the financials down. What they specifically said is that they come out with a statement that their trading revenue was down 15%. This is fixed income revenue, which is absolutely huge in every one of these banks. Bottom down is down 15%. That took JP Morgan, took Goldman, Bank of America, Citigroup, took them all really quickly down there. Bottom line is that when you take a look at this, what you're going to see is that we are coming right back into election night. Right now, you're at 81.74. You're breaking all the swings. You're going to break them with volume. Bottom line, 77.25. Looks like it's coming at us with JP Morgan. We go to Goldman, same type of setup in Goldman. Goldman was already a complex ABC structure on the way down. That had taken out the B point when it gapped down on the 18th of April, got down to 213, did a counter trend bounce up to 230, 229 to be exact. Bottom line, your ABC structure down is a price projection of 202. And it looks like you're going to not only get there, but we'll see how we hit the 205 area. 205 is where we started from on election night. And bottom line, they're getting back there. Bank of America, we put them up. They're all the same. And what's also happening here, which is going to be really intriguing to watch how this shakes out. These banks took off like a rocket ship, as the market did. So Bank of America is at $22.19. You're talking at $19.03. That's where this thing wants to go. It looks like it's going to break its consolidation probably tomorrow. The bottom of the consolidation on BAC is at $22.16. We're laying at $22.18. And you're laying there with volume picking up. And that would be the... if you were a bear on Bank of America, that'd be a good thing. If you're a bull, that wouldn't be a good thing. Because the bottom line is that if you lay out right at the very close and you have volume, which these banks do right now, more than likely you'll jump the creek tomorrow. Jumping the creek means that, guess what? You open lower, you jump over it, and it's very hard to get back on the other side. And, this is just a small jump of the creek, but that's what the XLE did this morning. The XLE, the low was 65.83. Yesterday, you closed at 65.72. Well, you closed under it yesterday. And then this morning, you just gapped down a little bit more. Bottom line, it's going to be hard to get that back. The reason is that it's so subtle and it's been down so dramatically for so long. You get ExxonMobil off 53 cents. That's ready to blow out its bottom at 80.30. Chevron, so ExxonMobil is the largest weighting structure inside there. Chevron's already done it. Chevron's got below the low, 103.83. You're at 103.49. And all of these are set up kind of like the same way, meaning sector by sector. What we have inside the Chevron is that should start getting some support somewhere around from 102 to 97. If we get into 102 and you get into 102 and we have volume, get out of the way because that would be a huge problem, and we would be running right down into the bottom of that bar very quickly, and the bottom of that bar is laying out at $97.52. 877-927-6648. If we do go take a look at how the volumes are going to come in, the ETF volumes are all going to be big, folks. The composite, right now the NYSE is 577, so that's going to probably do 800 million, which is a small expansion of volume. The NASDAQ composite, that's going to do about 1.8, 1.9 billion, which is also an expansion of volume. We'll see how the rest of this shakes out. Amazon, you want to see something that's pretty wild? Bingo, right, hit $1,000 right on the nose at the open. $1,000. Got up to $1,000.12, and then shot right back down to 982. And right now you're at 994. Google, which looked like it was going to try to make this run to 1,000, made it to 979.29. Right now, Google's laying it out here at 965. Microsoft was hanging tough up at the highs, still is, down 48 cents. It hit $70.74. You are at $69.94 right now. The XAU, the HUI, they're catching a bid. This is a good way to catch a bid coming into this weekend, folks, because we have window dressing. This should be a positive bias in the marketplace, and it hasn't hit yet. Next 2 days also, Thursday and Friday, first 2 days of the month, also window dressing. That's natural buying. That's what it comes down to. The XAU today rejected lower price at 83.45. We're at 83.89 right now, and this baby number one wants to go for the 88.01, which is the high from the 17th. I expect what we're going to see here, though, you're going to see a charge going up to this $90.83, and the Gold Bugs Index is kind of set up the exact same way. It rejected the 189.86 area today. You're at 193.97, and bottom line is that you tested those lows that were generated last week. We had a small expansion of volume, but it wasn't higher than we had previously. Now what you've done, you've tested that. It's going to be lighter volume. Now the bottom line, the run is on to 203, and I expect inside the Gold Bugs Index, you're talking about 216. So lots of action out here. Let's go over and take a look at Walmart. it's Walmart versus Amazon. That's what it seems like in this hunt out here. Walmart right now, still trading at its highs, $78.57. And that has a high volume swing at 79.44. So I expect what you're going to see is that you're going to see that baby get hit. If we take a look at the TLT, TLT right now is up. Now the TLT is the iShares 20-year plus fund ETF, and this is also a decent indication that rates are not only going low, but it looks to me like it's going to blow away the swing high. You get a swing high out here, 124.98. We've hit 124.64. This is gonna lay right at the high. Get some sleep tonight. Wake up all energized. Go after that swing high. You stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Dow Industrials are down at 29. NASDAQ is down 11. S&Ps are down 1.5. We're gonna be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Dow Industrials right now down 28. You get the NASDAQ off 10. S&Ps are off 1. And if we go over and we take a look at just what J.P. Morgan and Bank of America are saying. So J.P. Morgan and Bank of America, two of the biggest banks, said second quarter trading revenue is on pace to drop at least 10% because of tranquil markets curbing demand. Let's see. If we actually pull up the J.P. Morgan, I believe they came out with a full 15%. Okay. Yeah, so JP Morgan said revenue from its trading business has dropped 15% so far in the second quarter from the same period a year ago because of low market volatility. Fixed income trading is down for the first 2 months of the period, and equities are up slightly. Chief Financial Officer Marianne Lake said Wednesday at an investor conference in New York. Lake said she doesn't see any particular reason those trends would change in June. Well, bottom line is that what's going to get intriguing here is that when you actually look at the bonds, so what they're talking, folks, they're talking more than treasuries. What happens is that in fixed income, they're not going to make a fortune on the treasury market because what ends up happening is the treasury market is very transparent. Where these big banks make a fortune and get in trouble all the time, well, they've been getting in trouble lately, is in the fixed income area where corporations have debt outstanding, and that outstanding debt, of course, has a bid and offer, and there are a couple platforms that you can get the bid and offer, but the bottom line is that it's mostly non-transparent. And when you have that non-transparency, what has happened in the legal arena, which is, I suspect there's going to be more prosecutions probably, because what has happened is that there's a court case right now that's going on. It just went to the jury, actually, so we'll see whether these guys get convicted. But there's been 2 guys that have already been convicted. And what the conviction was about is that let's say you're a bond broker. You have customers. The customers calls up and says, okay, what's the bid and what's the offer? You tell them what the bid and offer is. You say, let's say I'm the customer right now and I'm talking to the broker. I say to the broker, what did you pay for it? The bottom line, the broker's saying what they paid for it, and guess what? They were telling them a different actual price than they paid for it. Well, they're prosecuting those cases now because they're saying that that's financial fraud. Now, the amazing part about it, there's no doubt, is that I can tell you, I've been in this business for a long time. And when I first got in, I was in the bankrupt bond business, but it was still my money and I wasn't a broker. I was buying and selling them myself. That was 1980. The bond people always made so much money because it was non-transparent. You never knew what the bid and offers was, so they were always working the spreads. The amazing part about this, and actually one of the guys that actually turned state's evidence inside that trial, he was saying, well, this is what I was taught. I just got out of school. This is what I was taught. Why am I going to tell the client what I paid for it? Well, in the financial business, evidently they were supposed to tell them what it was bought for. So it's going to be really wild watching how this one shakes out. The first 2 have already, they got guilty. There's 3 traders right now. The trial ended yesterday, and they didn't go on the stand. So they feel, and their attorneys feel, that there wasn't enough proof that they did something wrong. But bottom line, to go back to the JP Morgan Chases and the Bank of Americas and the Citigroups, that's what that's all about. Because they made a fortune in fixed income, this year, and they weren't supposed to. I suspect, we'll find out whether that's just a little sandbagging of the numbers, and they'll come out with the numbers, and the numbers will be good, or in fact, that's how this thing is coming down. Let's go over and take a look at the XLK. So the XLK, folks, has been the high flyer out here. This is technology select sector. This is when you take a look inside of this, your largest weighting structure out here is Apple, 15%, Microsoft, Facebook, Google, which is called Alphabet now, Marvell, Visa, Intel, Cisco. This little baby is still at highs. If we take a look at this, it's trading $56.35, and this has been a one-way trade. It hit a high out here today. Yeah, it hit a high out here today. That's the bottom line. We'll see if and when these babies are going to crack, because the NASDAQ, there's no doubt, is on its own little fairy tale here. Well, we have Apple. Apple's still hanging at highs at 152.84. We go take a look at Facebook. Facebook's, at 150.170. That's at highs. Google gave up $10, which is nothing on a $900 stock. That's down $8.89. And, of course, the king out here, Amazon, got to $9.82. You're trading $9.94. And it looks to me like, Amazon, folks, is rejecting lower price out here today. And more than likely will have some lighter volume, which is just a mind blower. No two ways about that. Let's go over to our man, Mr. Daryl Martin. Don't forget, folks, Daryl, Tom, and myself, we do a show on the Nadex platform every Monday, Friday, right here at TFNN. And, of course, you can check out the Nadex platform by coming over to our website at TFNN. You hit the banner on the top of the side. You can bring up the exchange. They'll let you trade with $25,000 of paper money to see how these defined option contracts move. Daryl Martin, what's going on?
Hey, man, how you doing?
Doing great, man. Yourself?
Doing fantastic. Had a fun Memorial Day weekend. So
yeah.
Went out to Waco. We did a big show out there, and Felicity took her rescue horse, a horse that, like, from a kill pen, you rescue them.
Yeah.
And we built them back up completely. Like, man, and he went out and he beat, like, everybody and everything. It was really cool. He's 4 years old. And so we took him out there, and she won the adult open, like, against everybody. So it was a fun weekend.
Did you see the Chip Gaines and who's the Chip and the fixer-upper? What's his wife's name? Do you ever watch that?
Oh, yes. I know exactly who you're talking about. Yes, but I can't think of the name.
I love that
but
program.
Yes.
It's Chip and Joanna Gaines. Joanna Gaines. Yeah.
Huh? Yeah, they did the fixer-upper show. Yeah.
That's in Waco, man.
Yeah, I know. I was handling 6 horses, so I didn't have time to do much more.
It blows my mind when you can buy a house so far in Waco, though, man. There must be a lot of land there. It's like crazy.
It's Texas, man. We got tons of land everywhere.
I guess so. Pretty well. Well, congratulations.
Outside the big cities, it gets pretty cheap. But yeah, it was fun. It was a fun weekend, and getting back into the swing of things and all that stuff. We got NFP coming up this week.
Yep.
So I'm excited about that because that usually has a nice little setup, and so we'll be having that Friday. So NFP's coming out. We'll have the ADP, report coming out as well.
Yeah, because what happens, folks, in the holiday, we had the holiday Monday, so it ends up happening. We'll have natural gas tomorrow and the oil report. Natural gas at 10:30, oil at 11, I think. So.
Exactly. Yep, you're right. Yep. So oil's at 11, and oil traders need to be aware of that. Not on the usual Wednesday time. It's going to be on Thursday, and we'll have the ADP, which usually doesn't have a massive, impact on the market, but it's something to be aware of. Comes out, at 8:15, and then going on over to NFP. So that'll be a nice volatile week.
It's a big deal. Folks, right here, you can listen to Daryl, Tommy, myself, 10 o'clock Friday morning. Be here. It's a beautiful thing. Daryl, thank you so much, man. Have a great one. Have a safe one. Look forward to the show on Friday.
You too, man.
Thanks, man. Okay.
Bye.
You stay right there, folks. We're coming right back. Dow Industrials are down 30. Nasdaq's off 9. S&P's are off $1.50.
New listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2019, 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow's down 27, Nasdaq's off 9, S&P's, folks, just about flat. It's the Teflon market. Let's go to Woody in Denver. Hey, Woody, what's going on?
Not too much, Tom. How are you doing?
Doing great, man. Thanks for calling. Thanks for holding. Appreciate it.
Hey, listen, I wanted to get your opinion on Tesla. You know, I'm tempted to buy it because it doesn't seem to be able to go down. It's had a heck of a move since March. But what do you think of the chances of a pullback and getting in at a better price?
Yeah, I wouldn't be buying. I mean, it just went from $180 to $339. I mean, it'll pull back. That's it's, Tesla. So picture what you have here. Tesla's a 25% short position. So everyone has been trying to short this forever. That means 1 out of every 4 shares have to be bought back every single time this thing keeps moving up. Yeah, I would just take your time, man. Wait for a big pullback,
Okay, love the show.
Okay, man. Have a great one. Have a safe one.
Thanks. Bye-bye.
The Tesla deal, and to give you a number on that, you're talking to like 269. Right now you're at 339. And, if you're a fundamentalist, it really gets kind of bizarre out here because there are no earnings. They lose money hand over fist. And they have, so you want to just see how bizarre this gets, folks. You get a market cap of $55 billion. And so watch this, $55 billion. This is crazy. And they take in $11 billion. Now watch, I'm going to go over to GM. And GM has a market cap of $51 billion, and they take in $161 billion. So that's pretty tough to swallow. Let's go to our man Mike in Somerville. Hey, Mike, what's going on?
No. Hey, Tommy.
How you doing, man?
Buddy?
Yeah, you have a good weekend?
I had a great weekend, buddy.
That's a beautiful thing.
You know I did.
I'm telling you, man, that trade come right into the close.
Listen, I didn't want to talk about the trade because I told Al at the beginning, we talk about that at 10 o'clock. You know what I mean? This is real. This is quick in and out at 3 o'clock. But listen, Tom, I got my lump sum yesterday because I told you what happened to me before. That, I retired. And,
good for
it was
you.
a beautiful thing. And I put some money to work today, Tom, already. I mean, I could, it was burning a hole in my pocket, But I did put some money for the first time in my life. I bought the GLD. And,
okay.
Just a little bit, not a lot, just beginning.
Okay. Yeah, well, you're at 120. I mean, you get that swing high up there at 123. So, we don't want this under the 120.19.
All right.
That's the number. That's that swing point there on the 23rd.
Yeah.
I think we get some action here. Because you had the gold contract moving today, and what happened, folks, is that this morning the gold equities weren't. They were actually in the negative. The dollar kept going south. Gold only caught a couple more dollar move, but that couple dollar move gave the gold equities enough to reject lower price, and they got slightly higher. So that's a decent indication that coming into Thursday, Friday, it looks like we're going to have some action. And this dollar, it only has another 200 ticks, I believe, to break out its bottom. So if we break out the bottom in the dollar, man, that is going to be let's see, we're at 96,955. Yeah, it's not even that. It's 100 and five. It's 250 ticks lower, and you're going to break out the lows.
Well, Tom, I bought just like because this isn't the other money we buy with Nugget and all that stuff. This is the real money. So I bought like some SLV, and I bought some GLD, and I bought the PPLT, just to get in there and just maybe a few years, hopefully, whatever. We'll see what happens. You know what I mean?
There you go. Well, just stay. This is just so you understand. So you're investing a little bit differently right now, and that when these things are in profits and you think you're never going to lose, you got to take your money, Mike. That's the bottom line.
That's why I listen to my man Tom O'Brien, because nothing's a short thing. It's not a buy and hold forever, buddy.
It's not. And the cool thing is, folks, what has happened, I've seen it way too many times. Inside the gold market, unfortunately, people don't take their money. And you got to take your money. It's a great market, but you got to take your money. It's like, I've said this a million times, man. If you think gold's going to go to $5,000, well, just go get a couple M16s and M30s, because that's all you're going to need. You're not going to need gold.
No, I get your point. I understand what you're saying. You're right. But you know what? What I do is I trade with that other stuff in that other account, and that's the fun stuff. And
listen,
you know what I mean?
No, totally.
So
I think
very long term, basically, is what you're saying.
Well, you can ride this, 6 months, a year and a half. I'm just saying that what seems to happen inside all markets is that when you're up so much, then you say, oh, if I don't want to sell out tomorrow because I'll make another $1,000, I'll make another $1,000, because that's what happens, folks, when these starts accelerating like that. Well, you just got to remember why you invested in the first place, and you got to take your bread.
There you go. I love it. All right, brother. Thanks for the
advice. Man. Congratulations.
All right.
Have a great one, man. Have a safe one. Let's go take a look at Great Panther GPL. So that baby is down 10 cents right now, 117 and 115. You want to see 115 hold out here. That's how that baby's shaking out. Now, it's coming into that with anemic volume, but bottom line is that you're at 966 versus 1.2 million right now. And what has happened, this is what's going on, too. It's going to be intriguing watching this shake out. Because what you did have happen out here today, now what's going to be intriguing here is this. We talked about home capital. So home capital, folks, up in Canada, has a real problem. Okay, and that problem was fraudulent loans, and this company itself was giving out huge amounts of loans in Canada. So what happened is that this morning, if we go and we take a look at Element, what you're going to see up in here, first I'll go over to the gold stock. There it is. Oops. Okay, so let's see. No, I want Element in Canada. Here, I'll find this at the break. The bottom line is that another stock blew apart today. A gold stock blew apart, and the gold stock that blew apart had to do with Muddy Waters. Muddy Waters is a guy that does a huge amount of research on companies, and he's been right more than he's been wrong. That brought the gold stock down up in Canada. Simultaneously, though, he came up with a statement a little bit later, because Element, which he had nothing to do with, got blown apart also. And what is happening up in Canada right now, actually, let's go look up the market. Excuse me, it's not that bad. It's down only 0.2%, is that the speculative fever between the housing and how this came about today, and the stock Element has to do with the nervousness in the marketplace. So that's not a good sign in general for the Canadian market. You stay right there, folks. We'll be coming right back. Dow Industrials right now, just, let's see, they're not positive yet. They're up down 20. NASDAQ is up 6. S&P's are flat. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 21. NASDAQ's off 6. S&P's are flat. We go take a look at the volume stats out here. We on the NYSE are at 670 right now, so that will come in at a good 800. Inside the NASDAQ composite, you're at 1.59. That'll come in about 1.8. If we take a look at the SPY right now, you get 58 million, which is an expansion of volume. Qs. Now, the SPYs and the Qs, they're hanging right at the highs, though. The Qs, this is interesting with the Qs. So the Qs are down 19 cents. You get a big expansion of volume, 141. But guess what? This could get lower tomorrow. 141.33 is what it really actually should have closed over. Not closing over that is saying it wants to go to 140.01, which is $1.15 down from where it is. And that doesn't seem like much, but because we've been up so much for so long, that will be a number. The IWM, this is going to be intriguing to see how this shakes out, because the IWM just tested its swing low, and it had an expansion of volume from yesterday, but it certainly has rejected this lower price out here. The IWM 134.23. We got to 134.64. And now you're at 136.35. So you're almost closing at a high. That being said, yeah, that's, I can take a look at the weekly, but it's too early right now because we have a one-day shot also on the weekly. So we'll see where this does shake out. If you close right here, that's saying that they can get a bounce. If we close at 135.92, which is not that far down, that would be saying that no, you're not going to get the bounce. It's that dramatic, because what had ended up happening as we just came into this close, the small cap made it all the way back. I mean, we just went from 135.52 to 136.34. Yeah, so big numbers coming into the close as you have this Teflon market once again. Pretty amazing, actually. If we go over to the XLF, because the XLF was leading us down. That's still low. That's down 18 cents. The XLE was right behind it. And that can't catch a break either. See, it's going to be really hard for the Dow Industrials to catch a break topside, as well as the S&P. The reason being is that both of those sectors, all those equities can't hold price right now, as the dollar's not holding price. And both of those sectors make a big dent inside the Dow Industrials as well as the S&Ps. NASDAQ is a different animal, man. You know, until the NASDAQ decides that it's going to give it up, the Qs are on a whole different ball game. You know, they bottom line, you know, you had that down day the 17th, came right back, didn't break a swing point at this highs. Looks like they want to go higher as the Dow keeps dragging the rest of these equities down. You know, because inside the Dow, it got back about half of it, but that's not enough. The Dow would have to close over 21,070. That's 60 points away from that right now in order to basically get into higher price once again. So the Dow still hasn't tested its high, which is the 21,169 area out here. We get the, let's go take a look. I want to take a look at this copper market for a second. We haven't looked at copper for a bit. So copper is trading out at 258. Okay, so this is a large consolidation, but it looks like it's off the bottom. That's positive in the aspect of a lot of these commodities, especially these metals, have been having a tough time holding price. You stay right there, folks. We'll be coming back with some numbers. Dow Industrials, down 25. Nasdaq's off 4. S&P's are flat. Gold is up 540. Silver's flat. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You know, you guys, over the time and with a few of your courses and seminars, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, it's a great deal.
No, we appreciate the growling problem with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Serve the one you love. Once you decide to be a couple, you're there to serve the one you love, to serve your love to your lover. And every kiss and every touch you feel, you're there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We had the Dow Industrials down 20, NASDAQ off 4, S&P's up 250, gold contract up $5.80, trading at $1,271 an ounce. Silver down 11 cents, $17.31 an ounce. Platinum up $9.50 at $9.49 an ounce. Copper flat, $2.58 a pound. Light sweet crude down $1.45, trading out at $48.22 a barrel. Notes, 10-year note up 1 tick, 126.15. 30-year bond up 9 ticks, 154.28. Now, both notes and bonds, folks, bottom line, they don't want lower price. They want higher price, lower yield. We actually got under the 2.2% today in the 10-year. Right now, you're at 2.206. So pretty amazing, particularly in light that the Federal Reserve is still saying that they're going to go up on short-term rates at the next meeting, which is June 14th. There's an 88% chance, probability chance inside the Fed Fund futures, folks, that is going to happen. Bottom line, people still are buying bonds, and they're buying more than they're selling. And so what that is doing is raising the price, lowering the yield. King dollar. King dollar just can't handle higher price. King dollar is down 267 ticks. You're trading at 96.945. And inside this King dollar, folks, what you have happening here is that looks like good old King dollar is going to open right at its lows tomorrow. Of course, King dollar is going to trade all night. But when our markets get active, 6, 7 o'clock in the morning, tomorrow morning, Eastern Standard Time, King dollar closed out at 96.945 in the futures. The low is 96.700. So you are only 245 ticks away from that low. And I expect, more than likely, we're going to see it go after that low. The notes, we go over to the note market first. We take a look at the notes. What you're going to see with the notes closed at 126.15. And the notes have the volume behind the move also. Bottom line is that you actually, 126.06. You did 1.4 million contracts. The rollover is happening right now, too. The high that's going after is 126.10 and 126.13. 126.13 was the spike that we had on the 18th of May. It didn't hold price. 126.10 is the number. And, this pullback that the notes and bonds had, folks, was very minimal. We were at lows on May 11th. From May 11th till the 18th, you went higher. You only pulled back. When I say higher, you went to 126.13. You only pulled back to 125.14. That's 1.2 ticks, and you took right off again. This thing wants to break its highs. And if we break those highs, that's going to bring the 10-year under 2%. So it's pretty wild watching this whole thing shake out. We go take a look at the S&P. What do you have at the S&P out here today? This is what we have. The SPY closed at 241.44. Bottom line, you're at highs. You know, you had an expansion of volume, but a rejected lower price. Rejected lower price at highs. The SPY would have to get under 240.32. Dow Industrial's a little bit different. The Dow, between the financials inside the Dow and the oil stocks, that kept the Dow down $20. Big deal, right? Bottom line, though, it's under the 21,070 mark. You're at 21,008. The composite and the NDX 100, they're on their own. That's the bottom line. The composite is sideways move today, down $4.60. You're at highs, 61.98, and the that is at highs. The NDX 100, sideways also, down 580, 57.88, and that's at highs. Now what we have happening too, you had today and yesterday window dressing last 2 days in a month. Tomorrow and Friday, big numbers, because what you have happening the first 2 days of each and every month is that you have all the 401k money that's coming into the marketplace. That's going to get put to use. The reason that's going to get put to use is that the fund managers do not get paid unless that money is put to use. If we go over and take a look at the NDX 100, what you're going to see, this is pretty wild. Right at the close out here, the NDX 100, folks, went from a price point of 57.86 to 58.04. You know, bottom line, it gave everything up this morning. It started at 58.19, got down to 57.63, and just rocketed back topside. We take a look at the now. What has happened here? Now this is where it's going to get interesting. Is that, you know, we've got a couple little dojis up here the last couple of days, and now what has happened here is that this is another doji. You know, which is indecision, but when you get dojis at highs, it can be problematic. I suspect that the good old NDX 100, though, is not going to have any huge problems in the next couple of days, you know, because they're just piling on top of basically markets that you had Amazon hit the $1,000. Google got close to it. Google traded to a $9.79 today, then gave it up. Now, Google has some volume off the highs, so this is going to be interesting watching how Google's going to shake out here. It's been a nonstop run topside since $817, April 11th. Yeah, it's pretty amazing. It's not even 2 months. And in fact, if we put them this way, this last run up, started April 21st, May 21st, a month and a half. You've gone from $824 to almost $1,000. If we take a look at Amazon, this is pretty amazing. Amazon, April 1st was $833, and you hit $1,000 today. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials finished down 20. NASDAQ off 4. S&P's up 3. We're going to be coming back with our man, Mr. Chris Gaffney, the president of Everbank World Markets. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 20, NASDAQ off 4, S&P's up 3. Let's go over to our man, Mr. Chris Gaffney. Chris is the president of Everbank World Markets. You've heard him many times over here at TFNN, folks. What I'd love you to do, come over to our website at TFNN, and on the right-hand side, you're going to see that Everbank banner. As you hit that banner, you're going to see grab your passport and step into foreign currencies. And I'll tell you, the way the dollar's trading right now, you better step into something. Chris Gaffney, welcome back to TFNN.
Thanks, Tom. It's a pleasure to be here.
You know, it's amazing. I mean, and it's great having you on all the time. But, and we talk about the currencies, and your products are phenomenal. But it is amazing. This dollar cannot catch a bid. I mean...
No, after 5 years of dollar strength, we've seen maybe, we may be at an inflection point here with the dollar turning and actually heading lower. I think that, it was priced for perfection, if you will,
yes.
and everyone thinking the dollar was just going to continue to rise as the U.S. Fed was ahead of all the other central banks as far as rate increases. But we've seen a couple bumps on the economic front on some of the data that shows maybe we're not growing quite as fast as people thought, and
sure.
In fact, maybe some of the other countries are starting to catch up, and we're seeing the ECB start talking about a possible taper and questions about just how quickly rates are going to rise here. So we've seen a lot of that positive dollar positioning reverse itself, and we've seen some. It's been kind of a stealth move, if you will, because not a lot of people are talking about it, but the dollar has definitely started to give way a little bit.
Chris, I was going to bring that up about the move because folks, and I'm sure many of you are saying, well, hold it, I've been listening to TV and the dollar's been going up. But the dollar's been going down for over 6 months, folks, okay? We had a big, the election night, it went from 95 to 103, but we've been down since then, which is pretty amazing. So let's talk about how, these foreign currencies work. We've been talking quite a bit about it because the dollar has gone down so dramatically, but these are amazing accounts that you have, Chris.
Well, thanks. Yeah, and we're pretty proud. They're pretty innovative accounts. We were first bank that we know of, U.S. bank that we know that came out with FDIC-insured foreign currency accounts. And what that means is that you can put in an account that's a U.S. bank account, and we can hold foreign currency in that account. Now, it's FDIC-insured against bank failure, not against currency fluctuation.
Sure.
But, you know, that's the whole purpose of it, is giving investors and clients a way to invest into foreign currencies and hold those currencies in a safe manner for the long to medium term. And the accounts are just like a savings account. You get daily liquidity, and they're going to fluctuate up and down each day with the value of the underlying currency. So it's a way to really take advantage of these movements in the foreign currencies.
And, you know, folks, when we talk foreign currencies, you know, you can go from the Brazilian real, the Australian dollar, the British pound. I mean, the pound could, you know, hit pretty good. It got hit again yesterday. The Canadian dollar, the euro, of course. You know, you want to take a trip.
You want to gamble, go to Russia. I mean, we can do the Russian rubles. So,
right.
Yeah, it's for anywhere from speculation up to, you know, we typically look at these accounts as more of a diversification tool, a way for investors to get outside of just holding dollars. When you talk to investors about their portfolios and you ask them if they're diversified, a lot of them will say, yeah, I have both stocks, bonds, and I even have some precious metals. But they rarely talk about geographic diversification or currency diversification. So, you know, that's a way to add some currency diversification and actually lower the overall risk of the portfolio. And again, because we offer 21 different currencies, there's always, you know, somewhere, or typically there's going to be somewhere that's starting to improve versus the dollar.
Yes. And, you know, when you come over to the website, so, folks, you'll hit the banner on the right-hand side. As you come over to the website, you'll see the headlines, grab your passport, step into foreign currencies. But what I'd love you to also read is this: global opportunities at a better price. And this is really important because the Everbank, you know, mantra is that they will compete with anyone out there. And in this particular case, can you talk about this a little? Because I happen to know, you know, when you're buying foreign currency, I guess we've all been at airports, we've all been at foreign currency exchanges, how, you know, expensive it can get. It doesn't have to, okay?
We were looking at some competitors' websites just today, and in their terms and conditions, they specify that their currency exchange rate are going to be 5%. So that means, you know, that's 5% when you buy, and if you go to sell, that's going to be another 5%. Our currency exchange rate, we pledge to be under 1%. So it's typically 0.75% to buy, 0.75% to sell. You're not going to find on a currency, small retail-sized currency trade spreads that thin in the marketplace. We're very proud of the spreads, and we put it right out there. And in fact, we showed on the statements exactly how much you're paying for each of your currency transactions. So we don't hide anything; it's all right out in front. And because we are very proud of that spread,
and it makes it so easy to deal with you. That, you know, what happens here, folks, is that, you know, as you come over to the website, right, you're going to see how you can open this account for a minimum of $100 a month, and that's a purchase plan. Or you can put $2,500 in, open it, and then you're going to be able to get all the product lines that Everbank has.
And you mentioned that currency purchase plan real quick. That's a great way for somebody to establish a position in a currency. $100 a month. It's dollar cost averaging. In my opinion, the best way to establish a position over a longer period, because you're buying more when the price is cheaper. So it's a really good way for a long-term diversification strategy.
Yeah, there's no doubt. Isn't it amazing how the marketplace for currencies has got much bigger? And it's really great that, you know, me as an individual, the clients you're talking to as individuals can actually take advantage of it. And, you know, it just makes common sense because we're a one world currency now. I mean, it
20
seems
years ago, when we started coming up with these products, you know, we kind of modeled ourselves after a typical European private bank that, you know, they offered these services for the wealthy European clients because they had a lot of cross-border transactions.
Yes.
And we kind of modeled ourselves there, but yeah, it's much more common now, and really, you know, because of the global trade, because of the internet and how fast information flows now, you really need need to have a position that's diverse, that's diversified among the different countries and different asset classes.
No doubt. And listen, folks, Everbank's phone number is 855-750-4051. That's 855-750-4051. You can also just come over to TFNN, hit the banner. You can call them up. You can talk to them about how these accounts work. And, you know, I'm sure you've heard Chris and I discuss, they have a huge amount of other products that are really good for a long-term investor, you know, because...
Yeah, even on the dollar side, we pay some good rates, and we constantly are coming up with some innovative products, and so, we love speaking to your listeners and hear them all the time on investments, anywhere from, you know, precious metals out to foreign currencies and even some of our U.S. dollar accounts. So we really appreciate it.
No, and listen, they appreciate it. You know, it's great finding a bank like yours. There's no doubt about it. Chris, you have a great one and a safe one. Of course, we always look forward to having you on again.
Thanks again.
Thank you. Stay right there, folks. We're coming right back. Our phone number is 877-927-6648. Everbank, 855-750-4051.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And Everbank's phone number, folks, if you'd like to talk to a representative there, it's 855-750-4051. That's 855-750-4051. And let's go, if we go over to the euro for a second, it's just pretty amazing how these currencies are moving around. The euro, you go back here to April 10th, you're at 105. Now, the euro cost you $1.12. You know, it cost us 105 then, now it costs $1.12. It looks like the euro is going to go over the $1.12, and we're going to deal with like the 116. That's the way this seems to be working. 116 is your higher swing point. Now, if we put this on a longer-term basis, what you're going to see is we've been in a consolidation since 2015. The top of that consolidation is the 115 to 116 area. So that's not that far away, you know, because bottom line is that when you go back to January, we were at 104. You know, so we got up 8 pennies since then. It used to cost $1.04 to buy €1. Now it costs $1.12 to buy €1. The high out here, this is what's really wild, watching the euro in general. You're talking about, when we go back to the 2008, you're talking about $1.60. It would cost $1.60 US dollars to buy €1. So you can see the correlation. If you're going to go to Europe, you might as well do it now. The dollar, now if we just do the opposite, and this is where it's going to get dangerous in the dollar, folks, okay? So I'm going to bring this back a couple years. Actually, I'm going to bring it back 10 years. So what we had with the dollar is that the dollar broke out of the lower consolidation in 2014. This is when, you know, the mantra is that, yeah, the dollar's going up. It did go up. It went up dramatically. It went up from 78 cents, okay, up to $1.03. So that's a big number. That's a beauty, right? No doubt. Now, that being said, we've been in this consolidation since March of 2015. Well, what had happened on the election night, the dollar first, for about 30 seconds, went down to 95. It ended up closing out the week at almost 101. Okay, so it rocketed higher. It ended up topping out at 103. That was in January, actually January 3rd. And since then, the market's saying, you know what? Nothing's going to change. Bottom line, in fact, nothing that's going to change is that Europe is getting stronger. The euro is getting stronger. Our dollar's getting weaker. And, you know, you can, technically, it's there. Technically, this thing wants to go to 91. Now, the problem can be or would be this. Let me pull this back up so you can see how this is shaking out. This is a long-term consolidation. And, you know, long-term consolidations can definitely last for years. You know, if we take a look, in fact, I'm going to put this 15 years so you can see the difference. Yeah. So we were in a consolidation from 2008 up until 2014. The top of that consolidation had been 89, and the bottom of the consolidation was 72. Okay, so how many? What's that? That's 6 years. Okay, so there's no problem saying that there's no reason this can't go for another 6 years, right? But if we don't, if it comes that, well, I suspect number one is coming down to the bottom of the consolidation, which is 91.880. You break that, then you get problems. You know, well, we have problems, meaning. And you don't have problems, folks, if you're not spending money overseas. What happens with all these currency fluctuations, and this is important to wrap your head around it. Well, here, first let me give you a number. Because if we break the 91, then you got 85 is game. And you break the 85, then we get 78. And the low of the dollar thus far was in 2008 at 70. You know, what happens with currencies in general is that if you are spending the currency and you're spending it in the United States, you don't actually see a huge difference in the actual buying power. Because what happens is that the goods that are getting imported, they have to bring the prices down. Bottom line, you know, they're making less because they can't push the prices up that dramatically just because your currency has gone down. They're going to sell nothing. Where it hits you and can hit you very quickly is that if you're doing business overseas in another currency, or we're going to go on vacation in another currency, it's huge. And I'll just give you an idea of the difference, because we're in Florida, and you know our brothers and sisters up in Canada, Florida should actually just be another province of Canada sometimes. It's pretty cool, especially when they come down, all the, you see them at the hockey games, you see them, there's a huge contingent of Canadians that come to Florida. So they're very aware of the currency moves, and they have to be. Because I'll show you, when you bring this Canadian dollar versus the U.S. dollar, it is about as dramatic as you can get. So picture, I'm going to bring this back 20 years. And the longer term aspect is the Canadian dollars have always been a lot weaker than the U.S. dollar. So when you're looking at this chart, in 2002, it would cost 160 Canadian dollars to buy one U.S. dollar. Huge, right? 160 to 1. That $1.60 to $1. Now, the Canadian dollar, as gold was going higher and the dollar was going lower, the Canadian dollar went from $1.60 to buy one U.S. dollar all the way down to 90 cents. It went past par. That was in 2007. So can you imagine that, 1 second you're paying, I'll just give you an idea, I'll just, say you're paying $1,600 for $1,000. Okay, so $1,600 in Canadian dollars gets you $1,000 in U.S. dollars. You're coming down to have a vacation. Then, all of a sudden, 5 years later, you are actually paying $900 Canadian, and you're getting $1,000 U.S. Okay, so you can see the gist of how important it is to understand, for Canadians, that in the U.S. dollar, because they're going back and forth. Okay, so now watch what has just happened again. And, I saw this affect the rental market in Florida, because what ends up happening is that they do long-term rentals, they do short-term rentals, all of the above. We have plenty of them. What ends up happening is that all of a sudden, in season around here, you get about $4,000 a month for places, right? Bottom line, $4,000 US, when the dollar is at $1, that's $4,000. Guess what? This winter, it went up to $1.46. So what ended up happening there? 4,000 was 5,600 Canadian. That's how dramatic the difference is in correlations to understand, what happens. The bottom line is, if you stay in Canada, no problem. So if you're going to take vacations, you want to go somewhere, check out those currency accounts, because it's pretty cool how that whole thing works. And I think all of us have got more cognizant of currencies over the course of time, because what always seemed hard is that, when I say these numbers, well, 112, yours at 112, what does that mean? Well, it means that it cost $1.12 US to buy 1 euro. When I say the yen, $1.10, what does that mean? It costs $1.10 to buy 1 yen. Okay, so you got to just figure that whole baby out. Stay right there, folks. Coming right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So the API numbers came out at 4:30. And tomorrow we're going to get the government numbers. Crude numbers, they declined 8.67 million barrels last week. Cushing, which that was down 753,000 barrels. You had gasoline down 1.73 million barrels, and distills were down. Distills were up actually 124,000 barrels. This crude draw would be the largest since September when compared with EIA data. What this did to the market, it gave it a pop of about 30 cents. That's about it. That's what it looks like. We were at 4:30. Yeah, we popped from 48.26 to 48.62. Right now, oil's still down $1.04. So check this out. This is going to get interesting to see how this shakes out. So wealthy Americans have put off some of their tax bills this year, causing such a pinch to government revenue that the U.S. could face a default on its debt months sooner than the White House expected. Now, there's not going to be a default on our debt. The reason I'm saying there wouldn't be a default because they'll push this down the road. But let me just explain what this article's about. Because it makes common sense, but we'll see where it shakes out at the end. High-income taxpayers may be anticipating future tax cuts out of Washington, but they may accelerate a political headache for the president, persuading Congress to raise the government's debt limit. So what's happening, folks, is that the Congress is in session for another 30 days, 30 working days, that's it. Then they're on vacation. And guess what? The debt limit has to be done by then. So, we've been through this so many different times, it's insane. More than likely what will happen, they'll just extend it, as they say, kick the can down the road, and they can kick the can down the road, I believe, out until December. But watch what this is saying. This is kind of intriguing. The wealthy may have deferred recognizing as much as 20% of their taxable income last year, according to independent estimates, a move that is legal and allows them to delay paying taxes on non-wage earnings, including capital gains. Trump's promise of tax cuts give richer Americans large incentives to shift non-wage taxable income from 2016 to 2017, said a senior researcher at the Rockefeller Institute of Government. The Treasury's monthly budget statement for April showed weaker than expected tax income receipts. The drop in tax revenue is significant enough to allow top officials, including Treasury Secretary Steve Mnuchin, who urged Congress to pass clean legislation raising the debt limit without policy riders by August. White House Director Mike Mulvaney said last week that the administration may soon announce an earlier debt ceiling deadline, citing the fall off in tax receipts. Debates over raising the debt limit have become especially politicized under former President Obama. Republicans used the specter of default as a leverage to demand spending cuts and other policy changes. Bills to raise the ceiling were commonly passed in the nick of time. Mnuchin began using special accounting measures in March to stay below the ceiling, and he has projected that the Treasury will run out of money in the second half of the year. The stakes are high. Financial markets risk volatility if there's political uncertainty about the U.S. government ability to repay its debts. Failure to take action in time could result in the first ever U.S. default. That's not going to happen. But bottom line, it could happen, but I don't see it happening. Mnuchin said he would prioritize debt payments over other government spending in the event that the ceiling isn't raised. America's wealthy may be partly to blame if the deadlines arrive sooner than anticipated. While most people pay taxes through deductions from their paychecks, rich taxpayers also earn income through the sale of stocks and other assets or by taking profits out of companies, resulting in capital gains. Taxpayers often make decisions on selling assets based on the current tax rate as well as the expected future tax rates. Mnuchin in January vowed that a tax cut, part of what he said will be the biggest overhaul since the 1980s, would not benefit the wealthiest Americans, who Trump said had reaped all the benefits of the economic recovery and left lower-income people in despair. More recently, Mnuchin has declined to guarantee that only middle Americans would receive a cut, saying that they need to make concessions to close the deal with Congress. Bottom line is that you can see that the market itself, okay, was expecting tax cut, expecting health care. They have neither. The tax cut is dead on arrival. Health care, we'll see whether they're trying to do something, before the end of the session. But the tax cut in itself, and the tax cut, folks, that they had floated was so large, you can see why people would say, okay, if I made $100,000 this year, I got to pay 30, 35 grand on it. If I wait, one more year, and one more year, by the way, all is that one more year, the way this shakes out, okay, depending on, is it all they had to wait is till over the December to January time frame. That's all that had to happen. And it looks like that's exactly what did happen. You could sell the product then, and you're still not paying taxes until next year. But it looks like that's what's came down, inside the larger structure. And the larger structure is where most of the money is actually going to come from. So we'll see where that shakes out. And as I said, they get 30 days. It's pretty wild when you think about it. We're going to June 1st tomorrow. They have 30 legislation days to deal with not new things that's supposed to get done, meaning keep government going. And then they're on vacation for August. And then you're talking about right back to elections in November. So this is going to be a fast and furious market out here. The Fed is coming out on the 14th of June, and they're supposed to bring short-term rates up. The way these markets are trading right now, it's still saying that the short-term rates might go up, but the long-term rates are not going to go up. If you take a look at the TLT, which is the iShare 20-year bond plus fund, the ETF, this baby is pushing into its swing highs with volume. We're up 31 cents today. You're at 124.40. The low of the high is 123.55. The high is 124.98. We're right next to it. That thing's going to go for it tomorrow. If we take that out, let me pull this back a bit. Ah, I see. Interesting. Okay, so this is what we have here too. This is going to be, this is a big number, folks. The reason it's a big number is that at the election, short-term rates, they flew up because they thought that was a reinflation trade, that, the infrastructure bill is going to get done, health care is going to get done, taxes are going to go down, everyone's going to be fat and happy, all of the above. Bottom line, bonds went from 131 to 121. That was a crusher. We're right into that right now. We're at 124. So depending on how long you've been listening to me, when you get into a bar, that big, meaning a 10-point bar with 4 points into it right now, we're going to go to the top of it. That being said, it just depends on how many times you have to get up here to get rid of that supply line. So that's why this is a big number for the TLT taking out 124.98, because you take it out, next thing we're going to be right up to the 131.21. And if we're up to the 131.21, that is saying there's something else that's laying out here. You're going to see basically, you know, the Dow and the S&P at least back down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials closed down 20, NASDAQ off 5, S&P's up 3.5. Gonna be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And folks, if you'd like to test drive either one of my newsletters, Market Insights, which is my daily newsletter, or the Gold Report, the way you do that, you can come over to our website at TFNN, go to newsletters. If you'd like to test drive the Gold Report, just hit the Gold Report. You get that 30 days absolutely free. You want to get the Market Insights, you can do that 2 weeks absolutely free. Let's go over and we take a look at the yen. So the correlation yen, dollar, gold. What you have with the yen out here today is this, is that the yen is going right into its lows. We hit 110.49 today. The swing low is 110.24. And it's just laying there. If we do that correlation, we go into the Nikkei, what you're going to see, because when the yen gets stronger, folks, meaning a lower number, Nikkei can't stand it, that gets strong, it gets lower. Now, Nikkei last night closed down 27 points. That's like nothing, because we're talking about 19,650. That being said, what it did do is got back in the lower range once again. You know, the Nikkei had broken topside May 8th, didn't hold it. Now, what we haven't done, we haven't got back inside the lower range with conviction. So next couple of days is going to be important as to how the Nikkei deals with the structure it's in. And the reason that we're looking at it so closely, because the aspect of how the yen trades is going to tell us all about the U.S. dollar, the gold, and silver market. And what we did get going inside the yen, inside the Nikkei last night is a huge expansion of volume, folks. So that's saying that it wants to go to lower price. We did last night 1.2 billion shares inside the Nikkei, and the day before that you're doing 700, 800 million. So that's a big number. We get over and we take a look at the FTSE over in the UK, because that's going to have some action. That election, I believe, is within a week. And what the FTSE did out here today, hit a high. High that it hit was 75.86. You closed at 75.19. And that's saying the FTSE tomorrow morning is going to try to get down to the 74.47 area. It's only about $60 down. But that also would be a breakdown from a breakout. All these markets, and if you want to see how all these markets basically correlate, correlate to each other, you can see it clear as day inside this UK. It was in a consolidation. The start of the consolidation was in January. It broke topside in May. And, if we go over to our own markets, what you're going to see is that the financials have already done it. It's pretty amazing. The financials and the oil and gas sector have been in a consolidation since December. The financials, the bottom of that is 22.79, and we're going for it. That we're going to go for it, I suspect, in the next couple of days. We go take a look at the oil and gas sector. What you're going to see, this has been a one-way move down. Bottom line, though, you still got a consolidation, and that consolidation started in April of 2016. And the XLE, the trading 65.44, that looks like it's going to go into 62.57, and that is going to make it very hard, folks, for the Dow Industrials to gain and to keep any type of traction whatsoever. 30-year, 10-year, still saying it wants higher price. And what is happening as we're speaking right now, this dollar is getting active again, and this dollar just may be hitting these lows out here basically in the next few hours, because the dollar right now is down 312 ticks. It's not going to take much to get into that low. And the low we're talking about in the dollar is 96.700. So check out that Everbank banner on the right-hand side, folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. Go have some fun with it, folks. Thanks for being here. I look forward to speaking at right back here, 9 o'clock tomorrow morning. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.